what do the home sales numbers look like? That could be very telling to see if the home data, if the housing market is starting to stall and decline. Why is silver doing so much better? And the answer is very simple. The optimism for people on the economy is very, very high right now, right? Everyone's thinking it's a soft landing, no landing at all. We're just going to be all good and great. In fact, the Atlanta Fed has GDP at 5.6% for the third quarter. So, I mean, even the Fed is saying, hey, listen, this economy's rocking and rolling. I'm a skeptic. I'm not going to lie. I'm a skeptic on that. But the answer is, because silver is more of an industrial metal inclusive of a safety store, this gets a bigger move versus gold has a very small move because the gold trade is more of a safety hedge. Right now, the markets are doing well these last couple days, so gold's not going to do as well. And also, the dollar has stayed relatively strong.
What's coming next in the crypto market? Crypto Market Insights. The Ripple case's impact on market regulation raises significant questions. A precedent-setting legal battle over XRP's classification as a security could reshape the crypto industry. Ongoing uncertainty might trigger market volatility as investors react to potential changes in regulatory perceptions. El Salvador's Bitcoin bond. El Salvador's successful Bitcoin bond return showcases the economic stability potential of digital currency adoption. This experiment could influence other nations to explore similar paths, yet they must weigh benefits against cryptocurrency's inherent volatility. Mainstream adoption milestones. Europe's first spot. Bitcoin ETF and Coinbase's U.S. approval for Bitcoin and Ether futures mark crypto's integration into mainstream finance. Accessibility to traditional investors could stabilize demand and market dynamics, although increased regulatory scrutiny may follow. Bitcoin's upcoming halving. Bitcoin's scheduled 2024 halving, reducing miner rewards, historically triggers price volatility. Pre-halving dips have been observed, but current factors and narratives might stabilize this cycle's outcome. Hedging strategies and a balanced portfolio remain wise during uncertain times. Navigating the market. Understanding trends is vital in the current crypto market. Price movements could range from a $30K surge to a potential $24K dip. A balanced approach, cautious trading, and portfolio diversification, favoring foundational altcoins, offer stability. Balanced approach. Consistent observation and clear trading plans outshine predicting market lows. Confidence comes from aligning trades with strategy and risk management, regardless of price fluctuations. The path ahead. As crypto navigates uncertainty, watch for regulatory shifts and macro indicators. Key developments like Bitcoin ETF approvals could shape the future of digital assets, fostering integration with traditional finance. Stay hungry and stay foolish. Now let's begin our enlightening discussion with Gareth Soloway.
The first thing I have to talk about here is the fact that we now have the 10-year yield. Look at this, guys. All right, the 10-year yield is now at 4.34%. It's a double top right from here, but look at this. You have to go back to 2007, the last time we saw the 10-year yield at this point. Now, for those of you that know about the 10-year and ultimately what happened in 07, we remember that the markets topped before the Great Recession. Now, I'm not saying that that's what we're headed towards. What I'm saying is that there's a certain amount of stress that's put on the economic picture or the economy, and when you have higher rates, it means more stress. Things break. We've seen it earlier this year with Silicon Valley Bank, with other banking stocks. Well, guess what? We're now at these levels. If we break above this range, you could be looking at some major breaks in the system, in the financial system. All right, the other thing to mention is mortgage rates. The 30-year mortgage is now as high as it was going back to 2000. That's the dot-com bubble high. So not only is the 10-year back to 07 levels before the financial crisis, but now you take the 30-year, the mortgage rates, going back to 2000. The other thing I'll mention here real quick, guys, at 10 a.m. this morning, watch for the home sales numbers. I'm very curious. I don't think this is going to be a major mover for the markets, but I am curious to see, with mortgage rates 7 to 8% now on the 30-year, what do the home sales numbers look like? That could be very telling to see if the home data, if the housing market is starting to stall and decline. So we have gold at a very pivotal level. All right, so I am long gold. I'm not going to, kid you on that. I'm absolutely long gold. And again, the thought process here is that you have a very beautiful downsloping trend line, pivot point to pivot point to pivot point, and here we are right into that line. We should get a bounce here. This is a triple top, even though I'm only showing 2 of them. But if we zoom out, we can see the triple top, right? Here's your triple top right here to here to here. The triple tops are shallow pullbacks. They usually break out. The double tops are big pullbacks like that. So big, here's your high, here's your correction, here's your double top, here's your correction, here's your triple top, smaller correction, and usually we get a move to the upside. So just keep that in the back of your mind. So I continue to be bullish on gold. Quickly looking at silver real quick here. If we look at silver, silver's actually performed better than gold in just over the last week or so. And you might say, well, why is silver doing so much better? And the answer is very simple. The optimism for people on the economy is very, very high right now, right? Everyone's thinking it's a soft landing, no landing at all. We're just going to be all good and great. In fact, the Atlanta Fed has GDP at 5.6% for the third quarter. So, I mean, even the Fed is saying, hey, listen, this economy's rocking and rolling. I'm a skeptic. I'm not going to lie. I'm a skeptic on that. But the answer is, because silver is more of an industrial metal inclusive of a safety store, this gets a bigger move versus gold has a very small move because the gold trade is more of a safety hedge. Right now, the markets are doing well these last couple days, so gold's not going to do as well. And also, the dollar has stayed relatively strong. Let's just go over a couple other things here, guys. I just want to really briefly touch on it. So we know that we're coming into NVIDIA earnings. That's the big factor here. Also, watch the 10-year yield. That is going to be key. Remember, in the beginning of this broadcast, I talked about how the 10-year yield is now at highs from 2007, the 30-year mortgage at highs from 2000 even, right? So the dot-com bubble. You have to realize that this is stress. Think about it like, just imagine you're putting weights on my shoulders. And when the yield is at 3%, it's dealable. 4% dealable. 5%, I'm starting to kind of, buckle. If you keep adding higher rates, things will break. It's just the nature of it. All right, so you have to be realistic in that respect and understand that if we continue up, it's going to cause problems. Now, right now, the market's saying, hey, put on your, if you remember cartoons, they have the hearts in the eyes. Like, that's what the market is doing right now with NVIDIA. So in love with NVIDIA that it's carrying the whole rest of the market. If that on earnings does not come out gangbusters, you're looking at a whole market sell-off. Remember, I showed you the Russell. The Russell continues to lag the overall NASDAQ 100 tremendously, and that's a concern of mine. So these type of things, guys, watch the U.S. dollar. We know Jerome Powell speaks on Friday. All of these will have a big impact on the market.
Don't forget to join us as we explore the unfolding events.
This was a chart I actually showed yesterday. I gave it out on Twitter right here at that level. And you know where, this is a Tesla chart, by the way. Look at the 2 trend lines. You know where Tesla's trading at? 240. 240. It's up from there. It's up $25 just from this post a couple days ago. So again, the idea is that I want you guys to be very on point with your money making, or at least your knowledge base. And I think that's where I'm at.
If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.